Hello, my YouTube friends. Today I'm going to talk about a consistent theme of bad news on great companies. I'm going to delve into four companies that I've talked about a little bit before. Probably talk about Starbucks a good bit, a little bit about Boeing, Pfizer, and Palo Alto Network. We're also going to discuss price action and what I pay attention to when I try to put on trades. So stick around. Good afternoon. My name is Adam Kahn, and this is Investing with Adam K. I hope you're all doing well. Today is Monday, May 6th, just to put a timestamp on everything. So let's go right into it. And I'm going to kind of vent a little about Starbucks and my frustrations of what I see going on there. They recently had bad earnings, which tends to happen over the long run, so it really isn't that big a deal. The stock got beat up pretty good, but I think it deserved that. Also, something that doesn't bother me. Now, part of why I say it frustrates me is it's one of my larger holdings. I think they're a great company in terms of brand and everything else. But when I watched the interview between Jim Kramer on CNBC and the CEO, I was super disappointed in the things he talked about when he went into a quote unquote action plan or talked about the occasional user not seeing their value proposition. These are just silly and tend to tell me that they don't really have direction going forward. And that's my concern about Starbucks is have they lost their way? Have they just become so big and so narrow focused that they don't see opportunity and ways to continue to grow? And I think they need to focus on market share and building the customer base instead of using terms like action plan and things like that. It just was super disappointing. I don't understand why they don't go back to their original roots, and maybe they should focus on being a place to go to get beverages where you can use Wi-Fi, meet clients, do work. They made a really comfortable environment for coffee. And if places are beginning to infringe in that business now that you have McDonald's and others coming around, maybe there's an opportunity to try to hit the younger age generation and add boba or milk tea and still stick with that drink concept. Don't get into the energy drinks like Red Bull or whatever else because it's a different type of clientele that isn't looking to sit at a coffee shop. But maybe those boba drinks and those milk teas and everything else fit right into their realm. The other thing is, I'd have to understand how much they're profiting off of the food part of the business. I don't know how much that adds to their business. And maybe they should just stick with a few of whatever their best selling pastries are and back off a bit and go right down to changing things. Get some young people mixed into the employment, add on social media, get some Instagram going, get some YouTube shorts. I love YouTube, but really get out there and start building that brand again because you already have a great name in the space. A lot of people are beating them up because they're overpriced and with the inflation and people struggling that they need to look at that end of it. In some ways, I think that's a mistake because Starbucks has always been the premier brand that people are willing to pay extra for. And I think it's important to stick with that and maybe not cut prices and do coupons and the things that they're considering. I watch kids walk into these boba shops and some of the other ones, and they'll spend the $7, $8, $9 for their drink. There's no reason that they can't intertwine those because it still fits their brand. Anyway, that's just my idea on it, and it's just one idea. Why they're not brainstorming on ideas and testing some things to see what they can do to continue to grow just boggles my mind. Blaming a certain customer group of the occasional user and saying they're not seeing the value proposition is just nonsense. And some vague action plan that you really don't outline for people, on top of the fact that I don't understand if you know that the earnings are going to be as bad as they are, why you didn't pre announce. I understand that would hurt the stock as well, but at least it lets people know you're keeping in communication and letting them know what's going on with your company. To simply blindside everybody and have no real good topic to discuss, I think you would have been better off not going on CNBC than discussing the things that you did and giving no direction. I was really disappointed. Oh, I guess he hears something. Um, but again, that's just my opinion on Starbucks. I still think they're a great brand. If you're looking to buy a great company with bad news at a discounted price, I think it's probably discounted. If it falls into the $60 range, maybe it's even a better opportunity. But be prepared for a tough year or two, because without some real direction, it's possible that it has a really tough time over the next few quarters, if not the next few years or two. I think it'll take a long time before they get their bearings and begin to start going up again. And unless this is just a one off that they really do have something in mind to grow the company. So the next one on my list that it's a good timing to talk about today, which is Boeing, because it literally just announced that the FAA is going to do probes into whether the employees were lying about what was going on with the, I think it's 737 Max, but I'm not 100% sure, so don't hold me to it. It actually, the stock was doing great. It reversed course, and right now it's down $2 and change. It's trading $177 last that I looked. And before that announcement, it was trading up around $183. It actually had almost gotten to $184 from what I saw. Now, I still see this as good opportunity. Eventually, the bad news is going to be done, and they're going to stop talking about Boeing. And even if the employees were lying, odds are they'll get a fine, they'll pay that fine, but they're not going to make it such a big fine that they put the company out of business or even put it into jeopardy. So once it's no longer in the news and not at the forefront, the stock will be free to start drifting higher again. Meantime, it creates opportunity to maybe get long it, and I think this is the price levels that you want to be buying it. If it gets down to 160 again, now it didn't get that low, but in the 160s, I see that as a great opportunity. Unless they have another crash or another problem that pushes it lower, I don't see what other information that could come out that makes it worse. If you look at back on things when they have bad news, I mean, look at Chipotle, go look at the chart. When they were having all that news about the bad food and everything else, it's a great company that had bad news. I think it's the same thing going on here. And when you start to think it's just going to get worse and worse and worse, all of the bad news is already priced in by the big funds and all of the trillion and billion-dollar companies that are buying and selling these stocks. It's not like we're privy to this information in advance of other people. And as it gets out there, it's going to make things worse. It's already out there. Same with good news. Unless you're able to predict something that isn't known, well, the price is in exact correlation of what it should be to the market today. So my guess is eventually the news dies down. It allows the stock to go back up because the sellers will be done, but that'll take a little time. Now, Pfizer, on the other hand, is a little bit different because the bad news is already done. It wasn't really bad news. It was earnings slumping because of how much they were making in COVID and that not being a major part of their income anymore. But that's already siphoned through. And their last quarter's earnings, they crushed it. It was a really good earnings. And I think as we go forward, and this is just my opinion, as I always say, you guys need to do your own research and not listen to me. But as we move forward, my guess is they continue to do just fine. And if they continue at the pace they did on this quarter, there's no reason the stock won't continue higher. And you're getting a 6% dividend in the meantime to own their stock. Pfizer's been around a long time. They've had a lot of ups and downs. They understand how to work through different economies. I think no matter whether the economy slows down or booms or whatever is going on, they'll continue to do just fine. As far as I'm concerned, Pfizer is a company that you can own for 10 or 20 years and they'll probably do just fine. They'll obviously have some ups and downs like every other company, but I see an opportunity to get in. And I think Bristol Myers is probably pretty similar. While they're out of favor, people are much more interested in other things because not only are they out of favor, they're kind of boring, so they don't grow too much. And you're getting a really good return right now. If you see the Fed in the position to start to pivot and rates start to come down, and you're not getting 5% in the high yield savings account or a 2 year CD, and that drops back down to 3.5 or 4%. And I'm not saying that's going to happen, but if that happens, you'll see the stock prices go up because they're not going to give quite a large dividend because that's just kind of how it works. It's all in relation to risk. The more risk you take on, the higher you get paid because you're taking on that risk. Right now, Pfizer pays a 6% dividend. If you see treasuries fall down to 3.5 or 4, I'm guessing that it'll make more sense that Pfizer will fall to those levels as well, which means higher stock price. Again, just my opinion. You need to do your own research. I think they're a really good company. I think it's a good opportunity, and I want to get in now because, as far as I'm concerned, if I get in while the dividend is 6%, no matter where the price goes from there, that's what I feel like I'm getting on my investment. So if the price goes higher and the yield is lower, I still feel like I'm getting the 6% that I'm getting from when I got in. So before I get into Palo Alto Networks, I do want to send a big thank you out to Ari Gutman, who did an interview with me, which was really flattering, and I'm really happy that I got to do it. If you haven't checked out his channel, by all means, check it out. He has a really good history. He talks about dividend stocks a lot. Um, and he's got great interviews with other people as well. I've really enjoyed watching those. It's pretty cool. Get to hear about people's history and backgrounds and how they got into investing. He does an interview every Monday, but he also has videos most days on dividend stocks and investing. If I figure out how to share that video, I'll put it in the description or something. I'm just not great at the internet stuff. I'm old and set in my ways, so it's not like I know how to share those things and do it. But I'm going to take a few minutes, see if I can figure it out. Anyway, Palo Alto Networks has been drifting back up. Last I looked, I think it was trading close to $300 a share. Now, earnings are coming out somewhat soon, and I'm anxious to see how they do this quarter. Last quarter, they talked about changing some of their practices, which the street really didn't like in terms of their future growth. I'm guessing if they have a decent quarter and they give a little bit of comfort to those who it made nervous, that you'll see the stock continue higher. Um, I think they're a great company, and I saw an opportunity when they pulled back as well to get into something that I don't have a position in. And both them and CrowdStrike, I think, are the two best in the cyber security field. And I'd like to have an investment in that space because my guess is it continues to be a really important space to be invested in. So when Palo Alto Networks had that bad quarter, and it wasn't really a bad quarter, it was just a discussion about how they're going to change things for the future in terms of growth, that it scared the street. It had a nice pullback, and I'm hoping that created an opportunity. Now, what I look for in general, because it was one of the questions that Ari asked, I didn't really answer it the way I would have liked to. Once I look for a pullback, I look for when it kind of feels like have worked themselves out, if that makes sense. I do try to buy great companies, and I don't just ignore everything. Now, I might ignore it to start a position so that I have it on my screen, and maybe I put 10% of what I want to invest at some point. And then as the stock goes lower, I'm able to add on. And if it goes higher, at least I have something in the stock. And the funny thing is generally if all I've put in is the 10% that I wanted to start with, and the stock just goes higher, I'm a little disappointed to see it go higher because I was hoping to be able to put in a full position. But for the ones that have bad news, what I look for is for that to work itself out. Boeing is a good example. It's probably going to bounce around a whole bunch. It'll look scary. If it gets worse, you'll be able to see it when something comes out and it starts pushing below the lows and just continuing down. Tesla is another one that to me, it seems like the negative news has probably been working itself out. If that's a company that you haven't owned that you've wanted to add into, again, you have to do your own research. This is just my opinion. It feels like it had enough bad news. There was a good scare in the market. And once it starts to reverse the way it did, I mean, Tesla has already moved. It got down to almost $140 a share. It shot up when he went to China and traded all the way back to almost $200 a share. It's now settled, and last I looked, it was a little above $180 a share. And if it doesn't push back down to those old, lows, and really, quite honestly, I don't really want to see it get below $160. If it manages to hold itself, I would like to think that the bottom is already in, and the news will no longer talk about all the negative things. Now, Elon Musk is always in the news, but I would like to think it'll just start to drift higher. And as earnings come out, hopefully they're able to continue to grow their earnings because, in the end, really, that's what matters. But that's kind of what I look at. Same with, Meta having a bad quarter, and same thing, kind of like Palo Alto Networks. Meta actually had a great quarter. The street just didn't really like about how much he planned to spend on the metaverse going forward. Its reaction since that quarter, to me, at least so far, is perfect. Now, I can't predict the future, but I think they're a great company. And I think the fact that the stock fell something like 70% the last time they were spending a lot on the metaverse scared the investors. And there was so much talk about that if it doesn't start pushing back down there, it could really have reversed and just keep going higher. I see the same thing in Caterpillar. I think, I'm waiting to see what happens with Disney's earnings tomorrow to see if they've really reversed. But once the stocks start going in the other direction, I find they go in the other direction a really long time, no matter if that's up or down. So I try to just sit and wait while they're going in one way. And hopefully, if a stock I really like is going down, I try to be really patient to see when the bad news comes out so that I hope that it works itself out so that it can then reverse and start going higher again. Once they start going higher, they tend to do that a very long time, and it can be years. If you look at the companies that go up, they go up for 5, 10 years, and it's not a straight line, and the down moves can be scary, especially if you have too much of a position. But you need to stick with it for the long run. Save, put away. Your future self will be really happy that you've put away and didn't spend on all the things. Like, I don't look back and think, gee, I wish I bought this or that. I look back and think, oh, why did I waste my money on something? I wish I had saved it. Now, a vacation, time with my family, things like that are invaluable. So I don't want to say that you can't live your life and you should be cheap and not spend on anything. But I do think it's important to see where value is and save for your future. Anyway, if you haven't already, do me a favor, hit that subscribe button, smash that like button. Tell me the stocks you think are out of favor that are good deals right now. There are tons of them all the time. Have a great day.